All right, how's it going, everybody? My name is Antonio, and I'm on the barbecue today on November 8th with Stephen Stewart, the president and CEO of Orecap Invest, which is a different type of company than what you're used to hearing about. This is not an explorer or developer. They are an investment issuer, a newly formed merchant bank, if you will. They're based in Toronto, in Canada, and they seek to make sort of contrarian investments in the exploration space. Again, basically at times when nobody else is looking to deploy capital, like right now, which is what we're going to be talking about here today. Who's not here today with us, though, is your financial advisor. This conversation is not going to include any recommendations to buy or sell anything. Instead, it's just going to be a casual talk between two people on the internet. And if you haven't been burned yet, you're not supposed to blindly trust strangers on the internet. For as far as you as a listener or viewer are concerned, this is going to be a conversation that's general and impersonal in nature again. And it's definitely not a conversation that you want to use as independent research, because it's going to include a lot of forward-looking statements about uncertain events that may or may not happen in the future. Please take a minute to pause the video right now and read the full warning that is in your screen, because the mineral exploration, development, and mining industry is among the highest risk industries out there to employ capital in. I'm not doing a full company overview, as I've had a very in-depth conversation, multiple ones actually, with the whole team behind Orecap already. So I'll make sure to link some of those somewhere for people to watch. But Stephen is here today to talk to me about Orecap's most recent acquisition, which is a copper project called the Theory. And the company holding it now is called the Cuprum, so Cuprum Corp. And Orecap bought this asset for an effective $3 million. This project hosts two past-producing open-pit mines that, toward the sort of the end of their life, transitioned to an underground mining scenario where they were mined up until 1982 at about 1% copper and also some nickel. And today, Theory hosts Ontario's largest copper resource with almost 1.5 billion pounds in the measured and indicated and inferred categories of the NI 43-101, as well as 200 million pounds of nickel and PGMs. There is a recent PEA on the underground portion of the known resource done in 2022, and it's showing an after-tax NPV 6 at $287 million and a 25% internal rate of return. Again, this is after tax. And this, they assume, is going to happen over a 14-year mine life and a payback period of about 3 years. But as far as I understand it, Stephen, that underground resource is not the main thing you're interested in, right?
Yeah, that's right, Antonio. Thanks, and great to be back. Rip up that PEA and rip up the old resources. We're gonna tear it back down. The way we view this is it's an exploration story with a hell of a head start. So it's got former production, as you noted, primarily out of the underground scenario, which is called the Theory deposit, and then there were a series of near surface, call it bulk tonnage zones that they have drilled out, the K11, the J, K2, etc. And that's really where our focus is going to be on is delineating and better understanding the geology behind this lower grade, sort of call it half a percent. Copper equivalent type material. Base metal is all about scale. So when the Theory was in production, small scale production, we don't love small scale production. We want big. And so we view this project as being extremely fertile. It's a mature mining district. We're in Pickle Lake. Pickle Lake is known but not really well understood. There's been a lot of high grade gold mining out of there in the past. Our neighbors are Barrick, our neighbors are Newmont, our neighbors are Oteco, was an Australian company. But historically, they were mining, Macassa-like grades, anywhere from half an ounce to 3/4 of an ounce. So it's really known as a gold district. It's really, it's very similar rocks. In fact, it's the same geologic rock, same province, the Uchi province, as Red Lake, which is latitudinally on the same parallel. The Pickle Lake camp is a little further east. So it's a really prospective project with a lot of drilling, which we have torn down, put into our database. We have a lot of experience dealing with brownfields projects in our group. I'll reference QC Copper as a perfect example of a brownfield project with former production that we've taken, broken down, reinterpreted, drilled out. And as many people who follow QC Copper will know, we are on the doorstep of releasing an updated mineral resource estimate. And I reference that because when I say this project, the Theory is very analogous to QC Copper. They're different, but very similar to our approach, very similar to what our plan will be. The Theory requires a lot of investment. It's not a we're going back down underground scenario. It is we're going to drill tens of thousands, maybe 100,000 meters. Eventually, that's the sort of thing that's required for these big bulk tonnage type projects to delineate the scale that is required to justify the capex that is required for a base metal type project. And then when you do that, and of course, as you say off the top, this is a forward-looking statement. So let's assume we are successful in delineating large bulk tonnage resources. The good news is we're on the rail, and the rail runs directly to the Horn smelter owned by Glencore in Rwanda, where when this mine was in production back in the late 70s and 80s, that's exactly where they sent their concentrate, just like the Opemiska. So the Opemiska, same thing, on the rail, sent it west. Now we're going to be sending it east, and it's got power. It's got the Musselwhite mine is about 100 kilometers north of us, and the province just installed a new high power, high tension power line going up there. So it's got lots of power running right through our property. You can drive to this project, which makes it cost effective from an exploration standpoint. You don't have to pay for helicopters. Things can get permitted here. It's a sophisticated local community in Pickle Lake. I mean, it's a mining community. It's the First Nations there have benefited greatly from Musselwhite, so they're sophisticated, understand the benefits that mining can bring and the trade-offs that mining has as well. So those are important factors. It's a really interesting project with as you say, lots of risk, but a lot of potential. And I think the risk is mitigated by the price we paid. And we bought it, as you noted, Orecap looks for special, unique situations, call it distressed situations that are born out of tough times. And geez, this is a tough time in this industry, but this is exactly why Orecap exists, to take advantage of that. And we bought it from a good company run by good people, but have fallen victims, not the right word, but they are under tough circumstances, had debt, had difficulty paying it off, and enter Orecap with its balance sheet to resolve their debt problem. We renegotiated the debt with the lender, who became shareholders in our new private company, which is owned and controlled by Orecap. And we're going to move this thing forward. And the vendor are going to come along for the ride because they're a minority shareholder, and that was part of the plan. Is they know they're giving it away at a very low price, but they know it's also high value, so they're going to be a shareholder, and they're going to get paid upon our success. So everybody's interests are aligned. I'm going to be a significant investor in the private company myself. We are doing a private placement into the private company, which is called Cuprum Corp, which is the one that's owned by and controlled by Orecap. So I'm going to be writing a check, a substantial six-figure check of myself at the exact same terms that Orecap came in at. And I'll also know QC Copper, who I've mentioned before, is also a 10% shareholder in this. And then we're going to move it forward. The plan will be, and we can get the details how we'll do it, but the likely plan is to do exactly what we did with QC Copper, because QC Copper was spun out of Orecap. American Eagle was spun out of Orecap. So there is a precedent that shareholders and interested shareholders can look at to see how we will go about this, and sort of the plan will be repeated. That's the most likely outcome. But if a better opportunity comes our way, and there's certainly some situations that have come and knocked on our door, who've taken note and interest in our investment, maybe we'll take a different turn. But anyways, that's the plan we're going. It's an interesting project, and it's an interesting time.
Timeline wise, what does that look like for 2024? What does that look like in terms of drilling and exploration? What is sort of the chronology of the steps that you'll be taking to get to the end goal of that plan?
So, the end goal, let's just say the primary plan is to take it public, spin it off. And I don't have a time frame, because it depends on the market, and timing is everything. I'm not going to go out and look to IPO it in 60 days because the market's not there. And we need the market sentiment to shift in order for us to be able to realize the value. So the good news is, I think the timing may align, because we have some work to do before we, quote unquote, go public. we have to we have to better understand this resource. We have to go up on site and really just continue to tear down and build back up this database. There's an awful lot of data on it, which we're in the process of compiling and then understanding. So that's unsexy work. That's not work that can be flogged in the market successfully, but it's very important work and it does take some time. So I would say that process is a 90-day process. And we're going to get ourselves organized corporately. How we go public, the going public process takes time. So, market conditions pending, we could go public in 4 to 6 months, but I stress market conditions pending. If we're in a market where we're pushing strings, we'll just sit there. We own it. It's not going anywhere. We'll be patient, and copper market is coming back. The whole metals market, the whole suite of metals is coming back. I just don't know when. But we love copper. I think this asset in combination with our asset in Opemiska, which QC Copper owns outright, gives us 2 out of the 3 largest copper resources in Eastern Canada. That's, to me, that's important and that's significant. I'm proud of that because we do believe in copper, and not just copper itself, but the fact that copper in Canada with access to infrastructure. I'm highly cognizant of all of the geopolitical factors that have happened over the last, call it 4 or 5 years, which have really changed the dynamic. And I think security of supply is going to be extremely valuable. So these sort of assets on the continent to serve not only Canada, but the United States with the raw materials like copper to rebuild our bridges, roads, and tunnels, which are crumbling. And then, of course, the electrification, which is a whole nother ball of wax. But it's so important to secure these assets, primary copper or gold assets, in really friendly jurisdictions like Ontario and Quebec.
In terms of drilling, though, do you have any specific plans for this year, next year? How are you going to tackle that?
Yeah, I'd like to drill. We'd like to drill. We like to work right away. I mean, market conditions notwithstanding, we want to drill right away. And we could do that. But again, it's going to be a function of us raising the money within that private company. So I wouldn't say we're going to be drilling on it in the next 4 months minimum. I think we're going to raise this private round to get the company organized and just sort of grease the wheels a little bit to sort of allow us to get prepared. And when I say get prepared, I mean to do the real raise. And the real raise would be on the order of magnitude between $5 and $10 million. A lot of things pending on that, but I'm just sort of talking order of magnitude of what we'd look to do. And then we'd look to deploy that in the ground and do 10, 20,000 meters and continue to learn about what this deposit is and where we want to focus, the subsequent program. We don't do it all at once. These things take time. But we're not going to wait, but we're also not going to force it, if that makes sense.
Sure. What you told me there's infrastructure there, so I don't assume this is helicopter supported drilling. What are drilling costs up there in Northern Ontario?
Well, I've never actually drilled in Pickle Lake, but I mean, as I'll assume, so I haven't had any drill contracts quoted yet. But we can drill, generally speaking, if you're on the road, you can drill all in $2 to $250. Okay. Is an all-in cost, and there's a lot of variability in that. But this is a project, again, it was a very excellent access to infrastructure. So I mean, the initial drill cost is probably $100. You can probably do $100 and $150 for your initial, and then you've got assays, other labor, other costs like that. So, $2 to $250 a meter. Okay,
sure. Well, but I mean, it's not in the order of magnitude of 8, 1,000, so on and so forth. So let's see, it's good.
No, when you're up in there, I mean, that's helicopter supported stuff, or very, very remote fly in, fly out, and that's why we love doing things where you can drive to, because it just totally reduces your costs, which reduces your risk. So you can put 2 or 3 times as much steel into the ground when you're on the road than if you're dealing with helicopters, which is, theoretically reducing your risk time 2 or 3, because it's all a function of putting meters into the ground.
It's sort of starting to look like a trend, though, for you with buying these assets or getting involved in these assets one way or another. What What's the goal really here for Orecap with purchasing these large historic mines, and now specifically like focused on Eastern Canada?
Well, I like Western Canada. I like all of Canada. I mean, Canada's a big place, but the whole thesis now for ORCAP and OR Group as a general statement is to acquire good assets, and I define good assets as being things that we believe have a chance of going into production. So that's the beginning thesis. We're going to swing and miss more times than we're going to hit, but we're going to drastically outperform the traditional 1 in 10,000 because we do take great care and we're very selective on what type of asset. Now beyond that, it's right now my thesis is to buy as many of those assets as I can, because I think now is a good time to be buying assets because we are just totally overlooked, underloved, undervalued. And so this is how I have built the OR Group over the past 10 plus years, is doing so in these troughs. And unfortunately our industry has a lot of troughs, but we do have some good times ahead. It's easy to forget that the period between 2002 to 2012 where it was a golden age, and we have been paying the hangover price for that for the past 10-11 years now. And I suppose that reference is not empirical in its evidence to suggest that the market's going to come back, but it's inevitable. And I think that the past 10 years since the metal market has had its legs cut out from under it, it's just been totally inundated with loose monetary policy, financialization of our modern world, and a reduction or a 180, a direction away from real productivity. And we've offshored all of our productivity to second and third world nations. And I think, that is all going to come home to roost eventually. I think we're going to see a need to have a return to real productivity, manufacturing widgets back on, the North American continent. And of course, in order to manufacture those widgets, you need its inputs, and its inputs are metals. And so that's a part of our thesis that is coming. And, that's a long-term thesis. And I don't care about what happens. That's not entirely true, but let's just say I'm not overly concerned about the next year or 2 or 3. It's about putting ourselves in front of this wave of demand that's going to come for these metal assets in Canada. So it's really Canadian focused. I like to stay focused on copper, nickel, uranium, gold. I tend not to get too exotic with the scandiums or the vanadiums of the world. They have their place, but we focus on our bread and butter in the jurisdictions we like. It just mitigates the risk for us in as you said, a very risky business.
Ontario's largest undeveloped copper resource, what you said, is what interests me sort of the most here as a catchphrase, if you will. But it's also getting me think, like you're getting it for an apple and an egg, as the Dutch said. So I mean, it's cheap. You're getting it for cheap. Why? And it's been sitting there for what now, 40 years since they stopped mining it underground. Why didn't anybody beat you to it over the last 40 years? Because the thesis you're working with is not. I mean, we all kind of understand where the world is going to, more or less. So I assume other people would also want to have a large copper resource, but nobody beat you to it. How come?
I can't tell you why nobody beat me to it. I could certainly tell you that there were other people in the room talking to the vendor of this asset, because the vendor, as I noted, a good group, good people, have a flagship project that's out in British Columbia, and they were about to have their debt called, and it wasn't a secret. And so there are other people, we call it my competitors, who were looking at this. I suppose I just had the best deal in front of the vendor, and I also worked with the lender, which was a key part, a critical part. And part of my plan was not to, because I knew I don't want to be insulting to say that I stole it, but I mean, we got it for an excellent price. But I think the key selling point for the vendor is that they're coming along for the ride, so they have upside exposure. So that was part of my key selling point. It's like, look, I'm not going to pay you what you think it's worth today, but remain a shareholder and we'll get you paid. That was part of our sales pitch. and how we got this across the line, because it was, it did take some time to get to the deal point. Deals are always epic sagas, and they're never simple. But under their tenure and other companies before, it lay dormant, and there's I can't even begin to speculate on why, and frankly I almost don't care, provided there's not a fatal flaw. And there are no fatal flaws that we have found. Maybe we'll find one. I mean, that's entirely possible. But it was we scour, we go through the raw data, we understand the metallurgy, which is certainly an obvious fatal flaw that you can evaluate. But this has production, which gives us a lot of comfort. If it has former production, it works to one degree or another. And perhaps somebody wasn't looking at it quite the way that we looked at it. One could make that argument for the argument that you're making, or the about how I know nobody bought it. Let's talk about the Opemiska. Opemiska sat in a private company owned by a family for 30 years. They shopped it around, but nobody, they shopped it around to the likes of Agnico, all the big guys. They were, well-known family, but nobody bit, because that family hadn't taken the time. They didn't have the resources, capital, or probably skill set to break this down, build it up, and come up with new interpretation, new ideas. To go and build up the database that we did in Opemiska was a massive task, 1 million meters. And it's not all neat, it's not necessarily all, wrapped up in a nice little Excel file. I mean, you have to work hard to take that analog data and make it fit. It is a task. And so now that we've done that with Opemiska, now the big boys, they don't want to do all that work, especially if they don't understand, the project, right? So now, we've done the dirty work. And so that allows it to go to the big boys. And that's where Opemiska is just starting to get to as we open up the data room. And the same thing with Thierry, is that I don't think people really understand it. Yeah, they know it had former production. There are 100 projects out there that have had former production, but tell me about, what it's going to look like under a new scenario. And that's kind of become our niche. And so we don't, it's not that we don't have interest in the underground scenario. We're going to look at it in the context of, can you go underground again on it? Or maybe it's an underground scenario, but really it's more about the satellite deposits there that have 100 million tons, if you include the historic resources there. That's interesting to us. And can we take that, turn it into 150, 200 million tons? Are there other high grade zones there? Is there another underground scenario? It's as I said off the top, this is almost an exploration project that we acquired at a pre-money valuation of $3 million, which is a modest drill program. But it's got a hell of a head start with nearly 2 billion pounds of copper equivalent resources in various categories. But it's got a hell of a head start, and it's in well-known mining jurisdictions. So this was an opportunity. It really is. This is the prototypical opportunity that we look for. It checks all the boxes in terms of risk and reward profiles that we like.
In terms of, I'm sort of looking for reasons where something might be wrong, and so the two main things popping up when I open up the map is that obviously always thinking about the locals, very topical right now. So local population, do they want another open pit mine to be built back there, back again? And second thing, there's a bunch of lakes. Like the land package is across a bunch of lakes. Are those potential challenges, or how do you look at the lakes?
Water is always a challenge when you're dealing with mining. You need it to mine, and you also want to avoid it. So it's sort of a double-edged sword. But yes, I mean, Ontario is blessed with natural lakes. So that is going to be a challenge, and we hope when we do find it, it's away as far as possible from any water sources. Even if it is away from water sources, you have to be very careful about how the water flows. So water is always a major consideration when dealing with a mine, underground or open pit. So that is a consideration. And in terms of the locals, well, I can't speak for the locals yet. But there's going to be a lot of work to go up there, and we're going to be upfront about what our intentions are. I think the community up there has benefited greatly from mining, and so we're going to have their ear, and That's for sure. Are they going to have a seat at the table in how this concept gets developed? Well, of course. Mining starts at the local level. No matter what your federal or provincial government's mandate in terms of pro or negative mining policies, if you don't have the local communities, municipalities, but also First Nations on side, you've got nothing. And so our approach is going to be to go up there and have them invite us to do work there. We know they're pro-development, obviously, and when I say pro-development, you need to do it responsibly. I mean, and I think nobody can get away with doing anything irresponsibly anymore. Don't even try it. So there's work to be done there, just like any project in Canada, or in my opinion, in the world these days, needs to be done with great care in terms of call it community relationships. Some would say ESG, but I think that's a buzzword, and obviously three things blended into one. But it's more than having a policy on your website. It's about making contact, communication with the locals, so that they're not surprised. And I find, if you do that, and everybody is taken care of in terms of opportunities and things are done responsibly, very rarely do you encounter real opposition for the sake of being opposed to economic development and mining.
That's also something you're dealing with on the Opemiska deposit with QC, and having mentioned or having thought about that, the theory is in terms of size close to the Opemiska deposit that QC has, but it doesn't look like it's the same metallurgy. I'm not sure if it's not. I'm obviously not an expert on that. Because there's also nickel in this deposit. What does that mean for? Do you know something about recoveries, cost of production, that type of stuff?
So we know a little bit about the metallurgy. It's certainly going to be one of the primary focuses we do. I think there's lots of upside potential on the metallurgy there. The metallurgy on the copper, as we understand it, is very good. The metallurgy on the nickel is not. The metallurgical processes that were run back in the 70s and 80s, the recovery was low. And we underwrote this thing at basically a zero nickel recovery scenario to understand what it could be if we couldn't improve upon it. But we do think we have a good shot, and I can't define whether that's a 1 or a 99% chance, but we have a good shot at increasing the nickel recoveries, which is going to be pure upside from our perspective, because nickel is very tricky to recover in any circumstances. But the nickel metallurgical processes over the last 30, 40 years have improved it significantly. And we've actually, had some people reach out to us already about some, sending them samples. So there's, but even sending them samples, you got to scale it up. So, the nickel and the PGEs are a question mark for us. We know they're there. The question is, how good are the recoveries? So that's upside. That's a challenge, a risk, but also an upside if we can solve it.
There's also, when you say sending them samples, that's interesting, because as far as I understand it, for the nickel to be a credit to the final sales price, there's going to have to be some sort of a nickel concentrate. So you're also going to have to be able to make that, not only recover it. Is that how it would work, or like what kind of samples are we talking about?
Well, it was core samples. So core samples with that are coincident, obviously, with any nickel sulfide mineralization that we see, which my understanding is also coincident with the PGM mineralizations. So just we're doing sort of lab scale sample. We haven't done it yet, but obviously that'll be the first step, is do lab scale samples, send them core. Have them run tests on their process and see what the recoveries are, and then you've got to scale it up in order to get serious to be able to have any real confidence in it, because in metallurgy, lab scale versus commercialization are completely different things. So it's a work in progress. But just as the geology is one of the risks of this project, or any nickel project. Again, nickel can be very temperamental. I think people need to look at, when you look for typical sulfide mineralization or nickel mineralization in sulfides, you need to look of the percentage of nickel held in olivine. Okay, I'll reference olivine is something you don't want when you see nickel, because you can't recover it. I believe it's a silicate. You'd have to ask the geologist or metallurgy, but you can't recover it, certainly not in the traditional ways or anywhere near in an economic process. I think you can recover anything, provided cost isn't a factor, but I just reference olivine is something you got to watch out for nickel. I can't speak, I'm not going to get into the metallurgy, the high technical details of the metallurgy, other than to say that I want to improve the nickel metallurgy on this project as part of our upside. An additional part of the upside is drilling, growing the copper resource, and so those are the geologic risks, the primary geologic risks that we foresee.
Right. And then in terms of drilling, you don't necessarily know much about when we talked about that, but just how much, what part of the land package you're focusing on. That's something you're going to determine in the future.
Well, certainly the lower hanging fruit is going to be on the K1 deposit and the K2 deposit. There's the J and the G zones. So there are zones that have been tested. There are other zones that show up on the geophysics quite nicely that haven't been tested. So there are historical resources on these J and K1 zones that need to be better. Like, we're going to go back there. I don't want to say we're going to drill them like they've never been drilled, but we're going to properly drill them, systematically drill them, bring them into, I say the 43-101, but bring them into a realm that, our group are comfortable with delineating. So, and that's going to take tens of thousands of meters of drilling. Make no mistake about it. Like that's you want to build an open pit scenario. You need lots of drilling. I do think we have seen these zones are fairly continuous. Just recently, the before we acquired or closed the deal, the vendor put out a couple holes, and they did some holes to keep the property in good standing. As you know, you got to spend money to keep the claims, and so that's, even though they were running on fumes, they put a couple holes into this, and they drilled. I forgot exactly what the zones were here. I'm just scrolling. 100 meters at 0.5 and 31 meters at nearly 0.7 in copper equivalent. That'll include the nickel, as we discussed, so buyer beware. But it's primary copper, and those are nice, long, continuous zones. And so I think the more continuous, the point I'm trying to make is the more continuous mineralization tends to be, the less drilling you need to put into it, theoretically, certainly to get to inferred. So that's nice. We're not necessarily going after skinny veins, which require a huge amount of drilling. It's, again, wider mineralized envelopes, which we like, and mining companies like as well.
Right. When you also mentioned generally the involvement of your group as a whole, and so QC's also got an involvement in this asset, which you talked about in the news release, that you sort of you saw it fit for QC to get a 10% exposure to this asset. What's the plan there? What's the involvement in this whole story got to do with it all?
Optionality for QC Copper. As I told you off the top, the primary plan for Cuprum, which owns the Thierry 100% with no royalties, by the way, is to spin it off like we did with QC Copper or American Eagle. A potential plan B derivative, depending on the world and how things shake out, is it would be awfully nice for QC Copper to own this asset at some point in the future, after Cuprum has built value and better understood it, so that the risk profile fits within QC Copper's desire, and so that Cuprum and its shareholders have made significant appreciation on their investment. So those two things will have to align, and they'll be independently assessed and evaluated, and maybe they come together. Obviously, I am the glue between them there, but it would be awfully nice to own two out of the three largest copper resources in Eastern Canada. I think that is a compelling value proposition. Again, dovetailing with my thesis is that these types of assets, Thierry and Opimiska, are going to be extremely coveted. Right now, nobody cares, but there will be a time that they will be extremely coveted, because copper is the most versatile metal outside of iron ore, and very important going forward. And again, I just emphasize, Canada is going to be once again a powerhouse in mining, I believe. And if you can get these just right, they're not mega projects. These are not $10 billion capex projects, which we tend to stay away from. To me, these are the Goldilocks types of projects. You need size. They can't be small. They can't be 10 million tons. Those have to be super high grade in order to be mines. You need hundreds of millions of tons at respectable grades to be developable in the context of a base metal scenario. And both these projects either check the box today or have that type of potential tomorrow. And so I think putting them together, and again, keep in mind, they both sent their concentrate to the same smelter. And so, that's important for many reasons. So just strategically, I think to put them together at some point in the future could make sense. I wanted to get QC Copper involved in at this valuation, call it the seed round. It's never going to be cheaper. I hope, pretty sure. And so if that is going to happen, I think it would make sense for QC to be invested and have a toehold in at this valuation to make it have a competitive advantage down the road. And if we do go public, then QC Copper will probably just make some money, the good old fashioned way, and off an investment. So that is its QC Copper's investment proposition. Maybe one day it'll take it out. Maybe one day it'll make money on its relatively modest investment of $300,000.
Well, it seems, so from what I'm getting off of this for now is that there's a beginning. You've gotten something very cheaply, and there's a bunch of work to be done on it, which you're starting to do soon, and we're going to probably hear more about that over the first half of next year. What else is Orecap doing in the meanwhile, now until the end of the year?
Evaluating deal flow. That's where I focus most of my attention. All of the work in the, I call it in the trenches, is done by our technical team, whether that's Charles or Antoine or Francois or Gotham or many others who are supporting us and really helping us materialize our vision in a database. I'm always looking at new opportunities. And Jerry Brocklesby, who is been very fruitful. In fact, he originated this opportunity for us. I brought him in as our CIO because he's got relationships. And then Gotham assists me in looking in the, call it in other ways. So we come at challenges, and then we get lots of unsolicited opportunities. So I do have something in the pipeline. I can't really talk about it because I don't have a deal in hand, but there are opportunities, really interesting ones. We have a track record of doing all sorts of deals. Look at Orecap. I mean, we've got one of the most interesting portfolios in Canada, I think, if you look at all of the properties we've been able to acquire, and we, for the most part, own all of them. So there are no, big option agreements, which is something investors need to be wary of. Because again, if my thesis is true that the wave is coming and I don't know when, and I'm not so concerned about the next year or two because you can't control those sorts of things. As long as you own it, I think that's critical. But if you have big option payments, maybe one day you can't raise money and you don't own it. So I think that's an important part of our strategy, is to own these assets so that the time frames that we cannot control are mitigated to one degree or another. So we're busy looking at opportunity. We're busy moving forward the technical aspects of our multiple projects, from baseload to American Eagle to Mustang. I mean, all of our guys are working hard. I'm not super keen on big drill programs right now because I'll reference American Eagle. It put out nearly a kilometer. I think it was 930 meters at 0.5% copper equivalent. And it's almost like it didn't happen. Right? I mean, so what's the point? If your shareholders are not getting paid for big success, and that's a big successful hole, what's the point? And so then my mind shifts to, okay, well, how can we invest? Because there's always an opportunity in a good market and a bad market. It just depends on how you go about it. So to me, the opportunity becomes, again, the premise of Orecap is to acquire assets. And then when the sentiment shifts, that's when you raise money. That's when you put money into the ground, which we love to do, and look to develop the assets in hopes of progression, constant progression that happens over time, so that you can de-risk it and ultimately make it attractive to make either a construction decision or have one of the many mining companies out there who are looking for good quality assets and need to replace the depletion. I think we're going to have an M&A. I don't want to say a frenzy. I don't want to be overly promotional, but it's coming. And we're gonna own a lot of good quality assets.
Seems like the team is quite developed already, though. Would you be looking to make any other hires in the meanwhile, or are you looking for people? I suppose you're going to need someone for this company too, but just generally for Orecap.
Yeah, no, people is my biggest challenge, I would say. Which I'll tell that to the young mining professionals, which is something I'll just give a quick plug to, which has been the best thing I've ever done for my career. It wasn't its intention, but that's how it's evolved. And the people that I have met from it as a result, either directly or indirectly, James Sykes, Tony Moreau, Gotham, Joel, our CFO, all of these people I met as a result directly from YMP. So I have been fortunate to be, the sort of the founder, driving force behind the development of that group, and to use it as a pool of talent, because it is so hard to find good people. To answer your question, we do need to find a CEO to put in charge of Cuprum and so on and so forth. So I'm constantly looking for hungry, bright, motivated people who care about their work and are easy to get along with, because I don't want to work with somebody I don't get along with. So that's the challenge. It's as you go on our website, we say people, property, and capital. You need all three.